My general thesis is we will rally into year end. We will correct at some point. There's a bunch of hedge funds and RAAs and others who are into this who will need to take a bit of profits into year end. I think we'll get a bit of a shakeout, global liquidity slowing down somewhat, and then we should re-accelerate into the end of tax season. So my view is Bitcoin easily gets to 100 this year and probably is, 150 plus by March before it corrects again. And then we finish the year after a larger correction with a very strong rally into the end. Ethereum has been a laggard. I think it plays some catch up. I think it outperforms Bitcoin going forwards for a bit because, if we sit back and look at what the regulatory changes might be, that is the platform upon which most of the institutions start doing stuff. It's the Microsoft decision. Every bank has Microsoft computers, not Apple computers. So I think that Ethereum actually does better than most people expect going into the end of the year. Again, same price pattern, outperforms Bitcoin, Solana outperforms Ethereum. So it's the risk curve. It's currently today a $3 trillion industry. Think of this scale. It's a $3 trillion industry. If we just extrapolate the trend rate of growth and the number of wallets and all of that stuff, we get to 100 trillion by 2034. We're 3% of the way there. We've got 97 trillion of wealth to create in this space. We've barely started. I know we all use that phrase, we're so early, but the adoption of this technology as the financial system starts to operate on its rails, so you have instant settlement for equities, bonds, and all of that. The transfer payments, even central bank digital currencies are on these rails. Everything folds into these rails. RID, gaming worlds, all of these things. Well, if we're 3% of the journey, it's all to play for. This is the biggest trend we've ever had.
Could Bitcoin skyrocket to $150,000 by March 2024 with a potential obscene bull run reaching $450,000? Raoul Pal reveals why this cycle is unlike any other, fueled by regulatory shifts, institutional adoption, and a seismic shift in the economy. Stick around for the game-changing insights driving his bold predictions.
My general thesis is we will rally into year end. We will correct at some point. There's a bunch of hedge funds and RAAs and others who are into this who will need to take a bit of profits into year end. I think we'll get a bit of a shakeout, global liquidity slowing down somewhat, and then we should re-accelerate into the end of tax season. So my view is Bitcoin easily gets to 100 this year and probably is 150 plus by March before it corrects again, and then we finish the year after a larger correction with a very strong rally into the end. So that's how I think it plays out probabilistically. Maybe less, maybe 30% correction, so back down to 100 kind of makes sense to me. And it'll feel miserable and people will say, has the cycle peaked and all of that noise?
Right.
And then usually we end the second year after the presidential election cycle very strong, and then it peaks out sometime there. So if I give a range of targets, as opposed to pinpointing a target, worst case is 150, my base case is 250, and in an obscene bull market because everybody's buying, driven by a change of regulation, then it could go as high as 450. Yeah, so I think Solana finishes this year closer to 400 than it is to 200. So I think
this year, 6 weeks ago,
maybe even 350. I mean, it's a higher beta asset, so it should do better. So I expect that to happen. I think, again, it'll follow the same kind of price path as Bitcoin, but it should outperform all of the way. It's been in this consolidation versus Bitcoin, sideways consolidation. The next leg should be altcoin season, and Solana should be the king of the major alts. So I'm kind of expecting Solana from here to probably get to over 1,000, 1,250, something like that. Ethereum has been a laggard. I think it plays some catch up. I think it outperforms Bitcoin going forwards for a bit because, if we sit back and look at what the regulatory changes might be, that is the platform upon which most of the institutions will start doing stuff. It's the Microsoft decision. Every bank has Microsoft computers, not Apple computers. So I think that Ethereum actually does better than most people expect going into the end of the year. Again, same price pattern, outperforms Bitcoin, Solana outperforms Ethereum. So it's the risk curve. Two factors here. One is inflation has slowed down, but the prices have stuck, and that's a hard thing for people to take. We all complain. Every time we go to a restaurant, you go to the supermarket, you're like, really? Is this the prices I'm paying these days? And people haven't made that back. And the one reason we haven't really made it back is the business cycle. So if we look at the ISM survey, the Institute of Supply Managers survey, which is the guide to the global business cycle, it's actually been below 50, which means it's in sort of contraction for the longest period in history now, I think. So there's something going on with the economy, and I think it's because the Fed took so long to cut rates, because they were fighting the inflation demon of the past. They took too long, and that's kept a bulk of the economy slow. So if you translate that to the ordinary person, if you're running a sandwich shop in Manhattan, or you're running a dry cleaners in Chicago, you're not seeing the money come in yet. You're not seeing growth, your business grow. Now, the forward-looking indicators suggest we will get that and we'll get strong growth coming forward. But really, to get that business cycle turning, we still need the Fed to cut. First, I think this is a bit of a red herring, because as the world's reserve currency, you don't need to hold reserves in anything else. So that's why the US doesn't hold a basket of euros and yen and other shit. It doesn't need to. It's the world reserve currency. So they don't actually need currency reserve or national reserves. They have a legacy of gold, of which we don't know how much is there. So the way to do this is probably to say, well, any Bitcoin or cryptocurrency that's been seized, we'll put it in the reserve. And that's a way of appeasing the crypto crowd there's no point to have a reserve. I mean, maybe they do. Maybe they think that that's going to help them. But the worst thing it's going to do is just strengthen the dollar even further. And that is not good. A very strong dollar is a wrecking ball for the rest of the world. And without global trade and global demand, everyone goes through a recession. So you've got to kind of be careful of what you wish for. We're seeing so much all happening at the same time. EV, nobody realizes because it becomes politicized, but solar growth, the growth of solar power is more than all of other energy generation added together and doubled. People don't realize how fast this technology is moving as well, and how much the prices are coming down. So all of these things mean the price of compute is going lower, the price of energy and electricity will go lower over time. Nuclear can be thrown into that. And then you've got AI, which is driving exponential compute, which ends up with infinite human knowledge. All of these things are so disruptive, we can't get our heads around them. It's quite difficult to invest in a lot of it. A lot of it is in VC hands or in these giant tech companies. So you've got this fastest growing technology in all history. What are you supposed to do? Buy Microsoft? Yeah, you might double your money or triple your money, but it's not really commensurate with that. So the crypto side of the equation, because the whole new internet is being built on crypto rails. The AI will have identity and we will have identity on chain. Many of the things you and I have talked about, the larger use of blockchain as a technology, well, that's front and center. So I actually think we've got 6 years, and this is quite contentious. I think we've got 6 years left to make as much money as we can before we don't understand how the economy works. We've got, if an economy is driven by, if the economic trend rate of economic growth is driven by population growth plus productivity growth and debt growth, by the time you change this aging population, which is slowing trend rate of GDP down, replace that with infinite robots and infinite AI, we've replaced the population component. Same with productivity by lowering energy costs. We end up with ridiculous growth. What a financial market with AGI. So I think we've got 6 years. So actually we do a lot of this on Real Vision. So anybody watching this, realvision.com/join, there's a whole stuff around this 6 years. It's really important. I think we've got 6 years to invest to save our futures or cement our futures.
Raoul Pal envisions a historic Bitcoin rally, projecting $150,000 by March and even $250,000 or more if the bull market gains momentum. He attributes this growth to evolving regulations, institutional adoption, and a global economic shift favoring decentralized systems. Despite the upward trajectory, Raoul predicts a 30% correction after March, providing a psychological test for investors as Bitcoin retraces toward $100,000. This isn't just about Bitcoin. Pal highlights Ethereum's potential to outperform, fueled by its foundational role in institutional adoption. While Solana is poised to lead the altcoin season with predictions nearing $1,250. As digital assets grow into a $100 trillion industry over the next decade, Raoul emphasizes that this is the defining moment for investors to act.
It's currently today a $3 trillion industry. Think of this scale. It's a $3 trillion industry. If we just extrapolate the trend rate of growth and the number of wallets and all of that stuff, we get to 100 trillion by 2034. We're 3% of the way there. We've got 97 trillion of wealth to create in this space. We've barely started. I know we all use that phrase, we're so early, but the adoption of this technology as the financial system starts to operate on its rails, so you have instant settlement for equities and bonds and all of that. The transfer payments, even central bank digital currencies are on these rails. Everything folds into these rails. RID, gaming worlds, all of these things. Well, if we're 3% of the journey, it's all to play. This is the biggest trend we've ever had. If the trend rate of GDP is driven by population growth or working age population growth plus productivity growth plus debt growth, Indian households have low debt. Indian government has decent amounts of debt. Households are low leverage. Productivity is going to be from building roads, putting in the infrastructure that's required, and population growth comes from the fact that the average age is 28. This is like golden demographic. So India, over a long-term time horizon, is very good. The only thing that can upset that apple cart for a while would be a very strong dollar, but it's being offset currently by falling oil prices, which is the big input for India. So I've been bullish India for a decade. It's been the best performing market in the world for a long time now. So keep going. So firstly, we will notice that as the business cycle expands this time around, they'll hire less people. Investment banks generally, when times are good, start piling on the people and then fire a bunch of them. I think we'll see less of that. And then when it comes to the downturns, they'll just be cutting leaner. So I think the number of people working in finance and knowledge industries, lawyers, accountants, paralegals, all of those kind of things, will just be declining as a percentage of the overall workforce. I don't think there's a mass layoff, we're all firing our lawyers. I just think as firms grow over time naturally with the economy, they'll just hire less and less people, which is also fine because we've got an aging population. So a lot of people are falling out of the labor force. But yeah, that's definitely the case. So I think unemployment, it's starting to rise a little bit. It probably remains stickier for longer. And then the next cycle, it picks up a bit more. It's just this slow change. It's not like the steel mills in Pittsburgh shut down overnight. It's a process. Yep. It's not an instant thing. So what happens is when you debase a currency, you don't really see it. What happens is it looks like assets are rising, but they're actually not, because the purchasing power of your dollar is going down. So you're working your arse off every day, earning money, and you can buy less of a share of a house all the time. That's because earnings are not driven by debasement because they're a variable input, but this fixed asset, gold, real estate, crypto, equities, are all scarce assets, art, wine, and they all keep going up. So that's why one of the reasons the rich get richer and the poor get poorer in this environment is this process of debasement. So what you're seeing is that house prices, they're not going up or down in value. It's the purchasing power of the dollar that's going down in value. That's the real issue here. That's why we saw the 50% rise in house prices everywhere in 2020, 2021. Why? Because we printed a massive amount of money. So it made the dollar less valuable.
Raoul Pal's message is clear. This isn't just a market cycle. It's a paradigm shift. With Bitcoin leading the charge, Ethereum solidifying its dominance, and altcoins exploding, the crypto market's future is brighter than ever. But time is of the essence. As Raoul puts it, we have a 6-year window to capitalize on this generational wealth opportunity before the economy undergoes irreversible changes driven by AI, blockchain, and energy innovations. Are you ready to position yourself for this seismic change? Watch till the end for Raoul's strategies to secure your financial future in this once-in-a-lifetime opportunity.